If you had bought Netflix stock at the beginning of 2010, you would have seen a whopping 7,000% plus return on your investment compared to a measly 200% that the S&P returned over that same period. Now these returns aren't that surprising, seeing as Netflix almost single-handedly replaced the DVD rental industry, and since then we've seen a bunch of competitors come out like Hulu, Crave, Disney Plus, Amazon Prime, and most recently Apple TV Plus. But the one competitor that nobody is talking about is the potential Netflix of Bollywood, Eros International. And that's exactly what we're going to be talking about as I break down the Eros business in 5 sections throughout this video. By the end, you will see why it presents such a great growth opportunity and why it might make a great addition to your portfolio. So let's get into it. So as I said, in this video, we're going to be breaking down the Eros business into 5 sections. In the first, we're going to be talking about the Bollywood industry and why it presents such a great growth opportunity. The second section, we're going to be talking about Eros's business specifically. In the third, we're going to be talking about the recent merger they just completed. In the fourth, I'm going to go over some risks to look out for the company. And in the fifth and final section, I'm going to be going over the valuation and providing you with a rating of 1 to 5, 1 being a very speculative buy, and 5 making it a very strong and stable buy. Now, I suggest you stick through the whole video as I think you're going to learn some very interesting facts about not only Bollywood, but what makes Eros such a great company. However, for any of you who might already have some pre-existing knowledge regarding Bollywood or Eros, I have the timestamps in the description down below so that you can skip ahead to whatever section that you are most interested in. Now with that, let's get into the first section where I'm going to be talking about the Bollywood industry. Now, I'm going to be breaking this down into 4 main factors that are going to be providing Bollywood with a massive growth opportunity for the future. The first is that Bollywood is actually larger than Hollywood in a lot of respects. There are more Bollywood movies made on an annual basis than that of Hollywood, and in addition to that, there are a lot more ticket sales for Bollywood movies than there are for Hollywood. Now this isn't that surprising, seeing as the Indian population dwarfs the United States by having a population around 4 times the size of the US. But what this tells us is that there is massive demand for Bollywood content within India, and it is only going to continue growing as the domestic economy within India continues to improve. Now this leads us into the second factor that is going to be providing Bollywood with a massive growth opportunity, and that is the high levels of growth we are seeing in the Indian economy. Now taking a look at this graph of GDP per capita in India, we see that it is growing at a very rapid rate. And in addition to that, if we take a look at the population pyramid for India, which I know might sound a little bit weird, but a young population is going to be extremely beneficial for the Indian economy, as an aging population generally taxes an economy and restricts its growth. So the young population and the high rates of GDP per capita growth we're seeing are only going to benefit Bollywood as people are able to spend more on entertainment. Now the third factor we're going to be taking a look at is the growth in the digital economy of India. India is the second fastest digitizing economy in the world, second to only that of China. Now if you take a look at this McKinsey report that they released in 2019, you see that India lags China in a number of categories. However, they still are the second fastest digitizing economy in the world. In addition to that, they rank as the second fastest digital adopter in the world, second to only that of Indonesia. Now this is going to provide a massive growth opportunity for Bollywood, as a lot of their consumers are going to be able to consume more content and for longer through their digital apps such as Eros. So this is also going to provide a massive tailwind for the Bollywood market to continue growing and experiencing high levels of growth. Now the fourth and final factor that is going to be contributing to the growth of Bollywood is that there is international demand for Bollywood movies. And I could cite a number of articles that state that there is high growth in international demand for Bollywood around the world. However, probably nothing states that better than taking a look at Eros's revenue breakdown, where you can see that the majority of the revenues aren't coming from India, but are actually coming from around the world. So this tells us that the Bollywood market is not restricted to the Indian economy and is actually going to be benefiting from growth from all over the world. So those are the 4 factors that are going to be providing Bollywood with massive growth potential. Now let's move into the second section of this video where we talk about Eros as a company. Now if you've enjoyed this video up till now, hit that like and subscribe button so that you don't miss out on any of my future videos. So now let's get into the fun part of this video where we're going to be talking about why Eros is such a great company and why it's going to make a great long-term investment. Now, Eros has actually been around since 1977. They are one of India's leading entertainment companies, and they have primarily operated as a family-run business, currently with their CEO being Kishore Lula. Now, he took over from his father when he retired, and now Kishore Lula, along with the founders group, still own around 65% of the voting rights for the company. Now, another interesting fact about Eros is that 10% of the company is owned by Reliance Industries, which you might know is owned by Mukesh Ambani, the richest man in India, and also one of the richest men in the entire world. So this obviously doesn't have anything to do with the fundamentals of the company, but it's always great to see that it is backed by one of the richest men in the world. Now, I'm going to be describing some of the main points that make Eros such a strong company, and I'm also going to be going over their strategy. So some of the key points that you need to know about Eros is that they have the largest library of Bollywood movies. They have over 12,000 Bollywood movies on their platform ErosNow, which gives them a significant competitive advantage over any other competitors trying to enter the Bollywood market, as they're going to have to acquire the rights for all of these movies, which is going to be extremely expensive for them. Now, a lot of the content on Eros ranges from full feature-length movies to short films, which they call quickies. This name has always made me laugh because I could never imagine myself saying to somebody, "Hey, you want to go watch a quickie?" It's just absolutely absurd that they would call it a quickie, and likely what happened is that this just got lost in translation, and they're probably going to have to change the name of that to something else once they move to the North American market. Now, Eros not only acquires a lot of the movies, but they actually produce some of the top grossing movies in Bollywood. They have produced 2 of the 5 highest grossing movies in Bollywood history, which gives them a lot of power because they are the ones creating some of the most anticipated content, and it's going to be bringing a lot of users onto their platform. So now let's take a look at the strategy that Eros has used in order to gain 100 million users around the world and 26 million paying subscribers. So over the past few years, they have been on an absolute spree of signing deals and partnerships with various companies around the world in order to distribute their content for a very low cost. However, some of the biggest deals that they have signed are with Wasu Media, Apple TV+, Amazon Prime, YouTube, and recently with Microsoft in order to leverage some of Microsoft's technological capabilities to enhance their platform to make it a much better experience for users. Now, I am a big fan of this strategy as it's going to allow them to get a lot of recognition for their brand around the world for a very low cost, and eventually what they're going to be able to do is monetize all of those non-paying users by either selling ads to them or converting them to paying subscribers. In addition to that, they're also going to be able to raise the subscription price of their platform as the Indian economy continues to improve, providing them with even more growth in their revenues. Now, we can see the results of their strategy in the growth in their digital revenues, which have experienced a compound annual growth rate of 38% over the last 3 years. Now, I think Eros has done an excellent job at setting themselves up to benefit off of not only the growth in demand for Bollywood within India, but also internationally. And probably nothing explains that better than the recent merger they signed with STX Entertainment. So that's going to move us into the third section of this video where we talk about this merger and what it means for the company. So sometime in April, Eros announced that they will be merging with STX Entertainment. And if you haven't heard of STX Entertainment, you probably have heard of some of their movies. Now, STX is a privately owned entertainment company. However, they have made some great movies such as The Gentleman, which recently went on Netflix, Hustlers, The Upside, and Molly's Game. You probably have heard of all these movies, and they actually are pretty good movies. I just watched The Gentleman last night, and actually The Gentleman has a rating of 7.9 on IMDb, which is actually a very strong rating. So this is a very strong entertainment company who has a lot of experience making Hollywood movies and within the Hollywood market, and it's going to provide Eros with a lot of great expertise in producing and distributing their content in the future. Now, I've seen a lot of people saying that this merger has been completed, and that is not true. The merger has not been totally completed yet, and you will know that the merger is completed because the company will be traded on the New York Stock Exchange under the company name Eros STX Global Corporation. Now, this doesn't exactly roll off the tongue, but I do believe that this merger is going to be very beneficial for both companies. Now, one of the things that is going to be extremely beneficial for Eros specifically in this merger is that they're going to have access to extremely cheap capital compared to the 15 to 20% that they were paying back in India. Now, if you see in the press release that came out just a few weeks ago, they state that they will have access to a $350 million revolving line of credit issued by JP Morgan Chase. This access to cheaper capital is going to provide a very significant competitive advantage for Eros, as they will be able to acquire and produce content at a faster rate than they had in the past. And also, they're going to be able to distribute their content for a much lower cost than they have in the past. Now, in addition to this, they're also going to be benefiting from the Hollywood experience that STX is going to bring to them. And it's going to allow them to merge into the North American market much easier than if they were to try to do it themselves. So I am a huge fan of this merger between Eros and STX Entertainment, and I believe it's going to provide them with a very large growth opportunity in the future. However, no company exists without some risks. So this is going to push us into the fourth section of this video, where we're going to talk about two major risks that you should be aware of if you're making an investment in Eros International. The first risk is actually the merger itself. A lot of the time, mergers can be very tricky, and they can be made especially tricky if you're merging two companies from very different cultures, as what is happening with Eros and STX Entertainment. Since Eros has been a family-run and family-owned company for a large part of its history, it's going to be interesting to see how the management adapts to working with a privately owned American entertainment company. Hopefully they will be able to combine forces efficiently. However, there is still always a risk that this merger could create a lot of friction between the two companies and not end up being as beneficial for the companies as I believe. The second risk is that Eros has been caught up in regulatory issues in the past. Back in July of last year, CARE, the ratings agency in India, downgraded their rating due to a missed debt payment. This also led to a massive impairment charge for the company and led a lot of investors to losing faith in the company. However, one of the investors that didn't lose faith was Mukesh Ambani, as he actually increased his position from 5% ownership in Eros to 10%. Now, this issue with their debt payments is probably not going to be a problem in the future, and also it's likely that STX Entertainment would have noticed any serious issues in the due diligence leading up to their merger. So likely this regulatory issue was just a blip in Eros's operational history. And also, CARE has been brought up on some fraud charges where a lot of their executives would be giving companies bad ratings just because they had some sort of interest in the company doing poorly. So I don't fully trust CARE, and seeing as not only Reliance Industries but STX was able to look past that regulatory incident, I believe that this isn't going to be a major risk for the company in the future. So moving on to the fifth section, we're going to be looking at Eros's valuation as well as me giving them a rating between 1 to 5. So when I'm running a valuation, I use a net asset value and earnings power value model. This gave me an intrinsic value of $4 per share. Now, I was able to purchase the company at $2.12, and actually I've been trading the company for the last 8 months. I've been swing trading them for profit. However, since they announced their merger, I was able to lock in my position of 800 shares at an average price of $2.12. Given that they're trading around $3.20, this doesn't give you a massive margin of safety on the stock. So if you are conservative, you might want to hold off on purchasing the stock. But given the potential of the future growth of the company and the benefits of the merger they just signed, I think that purchasing them at their current share price is still reasonable. However, that all depends on your personal risk tolerance and what you're looking to get out of your investments. So moving forward, I'm going to give Eros a rating of 3. The reason why is because the company still hasn't necessarily proven itself as being successful at operating in an internationally competitive environment. However, they still do provide you with a very good growth opportunity, and this recent merger, although it does have some of its risks, is going to be very beneficial for the company in the long term as long as the merger does go well. So that does it for this video. As always, I'm not a financial advisor. All these videos are for your entertainment purposes. However, I hope you enjoyed and that you learned something new. I look forward to seeing you guys in my next video, and I hope you have a great week.